have you here. You wrote a really cool article on this, and let's start with sort of maybe the kind of understated implication of this deal. And what is that? Because it's a little bit of a bearish tilt.
Well, when you look at IBM, they've been all about AI and Watson for the last 2 or 3 years, and the summation of the thing that I wrote was that all of a sudden it's going to be about RedHat. What about Watson? What about AI? And all the hype and all the marketing push that they had put into that in 2016 and 2017. So the summary of my piece was simply that IBM is going to hide Watson under a red hat, which means that this cognitive solutions group that they've got, billions of dollars of software revenue, isn't growing quite the way they'd like it to, and now the focus will be on cloud infrastructure and trying to beat out Google to stay at that number 3 spot between Amazon and Microsoft.
You've got a good table here to put this in perspective, guys, if we can bring this up, the infrastructure as a service. Firstly, how does that differ from the software as a service stuff that we're going to be talking about with Salesforce this afternoon? This shows where IBM sits compared to its peers, basically right there behind some of the giants. But
right.
IaaS compared to software, how does that differ?
Well, this is the platform under which all that sits. So the software is really going to be the important story going forward, particularly as a lot of these workflows, especially enterprise workflows that cost so much to maintain on a proprietary basis, gets moved over to the AWSs and the Azures, and even what's not so prevalent in here down on the list is HPE is also in this hybrid cloud business. So this is the platform on which all this new software capability is going to sit.
It's like content on the software side and delivery mechanism on the infrastructure side.
Right.
Okay, so to give some perspective here on what you do at Alphacution, research, but you come from Tab Group, and you were also on the hedge fund side before as a trader. So then when you look at this, does it reek of a company that is kind of trying to slide something under the mat? I mean, what's kind of the implication from the market standpoint?
Well, just to sort of set the stage, I mean, what Alphacution does is study the impacts of technology on the trading and asset management business. And that comes from my background in prop trading here in Chicago, starting way back with O'Connor and Quant Labs, some of the highly automated trading strategies. So I take that approach to modeling the players in this space and using available data. A lot of it's regulatory data that I have assembled into a data set that allows us to do some benchmarking around the different players. Sometimes we do top down, sometimes we do bottom up. IBM is interesting from an enterprise IT perspective, and the way I've looked at it is what are they generating on a revenue per employee basis? This is an analytic I use across a lot of the analysis. And usually you can see the productivity, the underlying operation, as you look over many years of this analytic RPE.
Here's the chart we've got, and it's not too pretty, basically. You've got a denominator here of employee, of course, but the revenue side, we kind of know this story for IBM.
Well, here, you can't compare apples to apples when you're looking at businesses of different scale. So the way that you normalize that scale is you use the head count as the denominator. So then you can take, say, JP Morgan with 250,000 employees and Goldman with 35,000 employees and take their tech spend and their revenue and normalize that for scale. So now you can look at banks across a number of banks or trading firms across a number of trading firms. This chart on IBM gives us
How problematic is this?
It's what this is their conversion from purely hardware to software. So if we get to the other chart on RedHat, it's common that a software development group will generate about $200,000 to $250,000 a year in revenue per head when you look at it. So what's going to happen here is RedHat's going to join this, but they're not going to change this productivity angle. So behind the scenes, they may get the revenue boost and they may get the, earnings play, but internally, the operational analytics show that this doesn't really change the nature of things. It's actually a continuation of this.
So is it basically like tacking on, if you think about this as sort of momentum almost, if this is kind of the train and RedHat is another entity that then you tack on, is your point basically that if it's going in one direction, it's hard for that to not also move in that direction, no matter how well run Red Hat is? Tacking it onto this.
Red Hat is consistent from this productivity analytic with lots of other large software providers, both inside financial services and outside financial services. Software is mostly capitalized human capital, right? It's labor embedded into that software. So Red Hat is just a bunch of people generating this operating system, but in order to get use out of it, they do a lot of customizations so it fits into different kinds of operations. This picture is really IBM going forward. It's just a question of then how can they penetrate given all the new cloud infrastructure and hybrid cloud infrastructure that's going to be necessary as legacy enterprise workloads gets moved into this from proprietary infrastructure to hybrid infrastructure, ultimately to the more public and lower cost cloud infrastructure that AWS is dominating right now.
And then the pressure for IBM to basically do that in a fast manner, and this is the reason why we're bringing this up a month after, because I think this has a potential to be a seminal deal, right?
Oh, absolutely. Yeah,
look at this
question.
In 5 to 10 years and go, holy cow, that was the top moronic decision. Or just because the price they paid, $40 billion basically, and the multiple they paid, or we're going to look at it and go, genius. Is there any in between?
It's going to be hard for them. It's a 12x multiple on Red Hat revenues.
Sales,
it's a huge multiple. So the question of how you get a return on that, I think right now is less important for the folks at IBM in terms of changing the channel. They were all about Watson just a year ago or in the months ago.
Yeah.
AI will be a big deal. It's just that you can't move that freighter any differently than it's going to move. And a lot of the big buyers can't adopt that level of automation quickly enough to make those numbers work for IBM. So now they're changing the channel, which really is an important move. They've got to win in this infrastructure game, or else their core business is going to fold, and they'll be all about software.
So this is very interesting here. Right? This is the look at IBM gave us last quarter. Cognitive Solutions down 6%. Yeah. These are the annual numbers compared to the same quarter a year back. What I think is telling about this, and Paul, I want to try and extrapolate for a sec, if we will, because the point here about AI, the business that they've told us that they're going to build out, if that's not going as quickly and as successfully as IBM would like, does it have implications for some of the other parts of this sector? I'm thinking about a stock like NVIDIA, for example, where people have been buying it up. AI is going to do this. It's an exciting future. But the fact that IBM has to go to Red Hat to solve a now problem, does it tell us that the hopes of AI are a little bit further off?
Well, I wouldn't necessarily make that conclusion about NVIDIA. Okay. There's a lot of great use for GPUs and FPGAs. A lot of the big players are just getting into that game.
Yeah.
So, and that's the core story at NVIDIA. So I'm not suggesting I'm a seller of the AI theme.
Sure.
I'm just saying that we have to temper our enthusiasm as to the pace of how that gets picked up by the big buyers.
Yeah.
And so maybe the narratives get bifurcated between IBM and the infrastructure players and the specialists in speed and computational lift like the NVIDIAs of the world.